here with me another book. This is the Japanese Candlestick Charting Techniques by Steve Nison. He's kind of like one of the guys that I guess brought over the Japanese method of analyzing data or price data and time to like the United States. He claims that. I didn't look it up or research any further, but it's a pretty important book. If you're interested in the book, I'm going to put a link in the description to an Amazon link. Just putting that out there. So what I'm going to do is we're going to take a look at the book, flip through some pages, show you guys what it is, and just show some pictures and stuff, and then I will discuss, I guess, what I got from the book, because I like to do that, because this book has a lot of information in it. However, I feel like it's more important to tell you guys what I got from the book, as opposed to just saying, hey, this is the book, and this is what's in it, So we can read the preface really quick, just to let you guys get a better understanding. The book is kind of big. It's literally like a textbook, so it's gonna, wow, it says $100 here, but it was not $100 when I bought it. I'm not sure how much it actually was now that I think about it, but anyway, charting techniques used by the Japanese over 100 years are explained for today's traders and investors. So in the first edition of this book, Steve Nison revealed for the first time to the Western world the background and practical applications of candlestick charts. Now these colorful, exciting techniques are hot on the lips of leading analysts, traders, and brokers worldwide. Completely informative and global in its outlook, this revised edition provides in-depth explanations of how candlestick techniques can be used in all of today's markets to help improve profits and decrease market risk. This total updated revision focuses on the needs of today's traders and investors with all new charts, including more intraday markets, new candle charting techniques, and refinements to earlier methods. Let's flip to the back of the book. There's Steve Nison, more focused on active trading for swaying online and day traders. Brand new selections of Western techniques in combination with candles. A greater spotlight on capital preservation. Whether you are a new technical analyst or a seasoned pro, the rewards reaped by adding the candlestick technique revealed in this book should be immediate and long-lasting. So, just a quick about the author. I feel like I used to always skip this part. Like, I would never care who the author was, but that's arguably the most important part. Because of the author of the book, some, poophead, some idiot who's the one reading the book about they wrote, but, yeah, it's just, real quick. Steve Nison, charted market technician, was the first to reveal the startling power of candlestick charts to the West, and in the Western world, leading authority on the subject. He is the owner and principal of CandleCharts.com. He appeared on CNBC and has been subject of articles in the Wall Street Journal, Barron's, and Worth magazine. He has some other books and stuff. And, yes. Nison has trained professionals in almost every major investment firm in 18 countries. At the Federal Reserve, major commodity exchange, the World Bank, the New York Institute of Finance, and numerous universities. So Steve Nison's the real deal. He wrote a book just kind of explaining, his findings. It's cool. So you guys might know this already, but I've been studying Japanese, but I can't read this perfectly, but I can pick up that's ru, wa, so this is like an idea, then this is like some action, or this is a verb, and this is whoa, anyway, you guys don't probably care. Anyway, so he starts the book off, kind of just talking about, obviously, introduction stuff, more about himself. Let me move this book over a little bit. Let's start with the contents to see, what's in the book. Introduction, what's in this book, why use this technique, why does it have to capture generators' attentions, who's it for, some background, again, what is this book, the importance of technical analysis, historical background. I guess in that chapter he focuses on where he found it from, or not where he found it, but where, the uses in Japanese good culture, I guess. So, constructing the candlestick, revert patterns, these are just different types of, ways of using the candlestick. Magic doji, a certain type of candlestick. Put it together, convergence. This is where you take what you learn here and try to find what signals are you getting from multiple patterns or multiple candlesticks. I'll show you some. Then, we have to show it talks about volume, how to measure potential moves, and yeah, that's pretty much it. It's a lot of information though, so I'm just gonna flip through a little bit. I highlighted some stuff. I read this 2 or 3 years ago when I first started trading. I think I got this as a Christmas present. I went through this book really quickly because I wanted all the information, but I did go back and try to revisit some of the things that I thought would be important. So here's a common page. This is a comparison between a bar chart that most traders used, I guess, early on, and this is Candlestick. And you can kind of see how much more information a candlestick chart will give than a bar chart. Because you don't have these bodies, you have the bodies, but you don't have the wicks. You can't really, you could tell if it's going up or down with these. It's very small lines, but this is just more visually appealing, easier to read in my opinion, and it shows more information because of the wicks. Yeah, he kind of just compares it here. Here he's talking about a specific candlestick called the Hanging Man. I use these these are important. I guess that's why he talks about it first, or one of the first candles, is because here's a chart that he gave. This is Microsoft in March or February 22nd. I don't know what year, but it helps to signal reversal patterns. So here's one reversal pattern, but also we have kind of a shooting star here to help confirm this downward move. Then the Hanging Man here to kind of revert it. It's I'll get into exactly just because he found this, put it in the book and showed it. It's for educational purposes. It's never always gonna work out like that. That's what it's important to understand, but it does show a certain level of psychology in the market. That's the main thing to get away from here, is using these candlesticks. I'm gonna link a video below. I discussed the candlestick charts, but this is the book that I kind of reference in that video. These are important, or candlesticks are important in understanding in the human psychology at certain price levels of a given stock or market. Something like the Hanging Man or a hammer or something. It just shows that a price got reached very far down. It got bought all the way back up and shot past the start of the day. That is a very depending on the scenario, a bearish signal, or it can signal such as this, where it might be overbought in the market, depending on the volume and stuff. But again, it's more complicated than that. But using one candle, again, this first half of the book is just showing you the candles, getting you an understanding. Then in the later parts, he's gonna do a combination of candles, which is more predictable in understanding the psychology of what's going on. But remember, everything in this book, it's important and stuff, but it isn't like cookie cutter set in stone. This is how it is, because it's more complicated than that. There's more factors that influence the market than just the signals and psychological emotions of traders. Here's one pattern he talks about actually too, is the engulfing pattern. I did try to use this for some stuff, and it does show. It's pretty important. So this is bullish engulfing. This is a red candle, and then if the following candle has this giant green candle completely where the bottom and the top of the candle. So that means it started at the day after lower. It could have fallen below a little bit, but eventually it shoots all the way past the high of the previous day and stays there. That's a very bullish signal, and the inverse is true for bearish. Because think about the psychological emotional response to this. This day, it got sold off really heavy. But this day, a huge body, and it closes above. That shows that whatever price or whatever happened, buyers were not only pushed it above, but held it there in the previous day. Again, you don't want to trade just one candle, but it is something to put in your tool belt and understanding to further convict, or I guess not convict, a trading decision. Now that I'm looking at this book, I think I should go back and read it, because it's, for a technical trader, So you have like it's just some pattern, doesn't matter. Then you have 3 small green candles, all within like a tight time frame or tight frame. I'll just read what he wrote real quick. This pattern: 3 white soldiers are gradually and steadily rise with each white line opening within or near the prior session's white real body. Each of the white candles should close at or near its highs. If it is a healthy method for the market to rise, although the white candles are very extended, one should be cautious about an overbought market. The second, basically, so here are kind of 3 white candles. Here's one where one is much larger and it's kind of fading the green candles. Here's one where 2 is massive and the next one. So this could be bullish. As you get to here, this looks very bearish because you have 2 strong up moves of green candles. You can also, gauge with the volume and stuff to see the strength of that move or that candle. Then as you get to this one, it looks, it even looks a lot weaker. So it could be fading, right here, as opposed to here, where this might be beginning of a big move or a big candle. So there's just stuff like that in combination of other candles. We have, I guess the opposite 3 black crows. When you have these massive selling, like wicks or candles with huge bodies, that's a big indicator of bearish, like momentum, and no one's stepping in to buy at those prices. Yeah, that's a pretty big move down. Though this is Pennzoil. Here we have some more just charts, and he discusses it about just the combination of stuff. Like here's called like dumpling top. You got a up or a continuation of move, then a bunch of candles kind of just fading, and then eventually fades down because just the momentum, But he goes into more detail on that. In this part of the book, he talks about continuation patterns, and that's, in my opinion, when candlesticks represent a good part of, or it's like a good time to use them because you see a move, it happens, you can judge by the candlesticks if the move is going to happen again. Because in a market, there's always going to be a move, kind of a pullback to retest some level. This is just a fundamental understanding of markets. Once you see that, you can judge the price action. Will show it very, not easily, but it'll be understood. So you see the up move, you see continuation or a fade to some prior resistance or support, just something, and then another up move, and this is where you can really make money because you're following the price action in the human psychology of how the move is already happening. It's important to, sometimes not all continuation patterns are going to happen. Some fade out and stuff like that, but here he shows even more examples of just continuation patterns, just one to the downside. So here we have an up move, a candle stalled out, a fall down, a continuation, this is a reverse continuation pattern, a stall here, and a fall. This felt very far, wow. But it just, things happen in continuation, typically. Once a move breaks out, and that's what I like to trade because that's where the, momentum or volatility is, but I like to get in these lower prices, and I can judge a certain price by the wicks and candles of a given price range, and I can say, are people buying here? Is it valuable here? And yeah, I forgot what I was talking about, but I'll keep going with the book. In this chapter, he talks about, putting it all together, literally, as the name of the title of the chapter. And you see, this looks very chaotic, and he actually breaks down every single candle on this chart, and he'll talk about each candle basically. I think he just did this for like educational purposes because in normal trading you're not going to do this because it takes so much time and it's just not worth it in my opinion. But he broke it down to give a very detailed explanation of how that's going to work, or how that specific psychology in that market might have worked at that time. Here he talks about candlesticks with trend lines. I use this in every single chart I do, and this is really important to me. Actually, I forgot how important this was. I kind of took that for granted. Drawing certain trend lines and seeing price behavior around trend lines that is so good, and I did learn that from this book and other traders. But wow, I forgot how important this chapter's good. I might have to go back and reread this. Similarly to trend lines, he talks about moving averages. moving averages are good and how they interact with trend lines, but I don't trade them because I don't see the connection from psychology and like natural phenomenons with like candlestick. I just don't see that similarity. A trend line I can use like price data from people actually trading. Like this is just a derived line based on that, that's just my reasoning for not using moving averages, but it is here if you want to trade with them with candlesticks. Talks about an RSI importance, that's good too, and other technical indicators. I don't use too many of them, but this is the part where he talks about measured movements, like how do you predict how far something's gonna go. This is very, I don't think it's reliable, however it could be, but you never really know. But he talks about some ways of predicting measured movements. And in the back he has definitions and stuff to further understanding about just things in the book, and that's pretty much it. Great book, actually. I forgot how good this book was and how much I learned from it on like a technical trading level. So now I want to talk about kind of my experience or what I got away from the book. Technical analysis is a good way of understanding human psychology in a market based around certain price levels over a given time frame, and that is literally what candlestick charting does. Now this book is pretty massive. It's got so much information. It doesn't look that big, but it's got a lot of its information and it's practical, but a lot of it I found to be, I don't need it. I think it's important to pick and choose things that you think are important in technical analysis and then put that into your trading toolbox. For me, the candlesticks formations around certain price levels that I've deemed to be support or resistance or trend lines that keep going up, falling. I draw lines around these price levels and seeing how the candles are reacting around them. Do they seem bullish? Are they bearish? How are the wicks? If there's a big wick on a trend line, I like that, because that means it hit that line, people bought it up. People hit that line, people bought it up. That shows me bullish signal around that price. The same goes for selling. I can see, look at that big heavy selling wick right off of this trend or resistance line. That's gonna give me a bearish signal. I mostly focus around, again, the ascending triangle pattern. I like to see the wicks around those price levels of the rising support and the resistance. I guess the main thing I do look at are the wicks. I guess that's really it now that I think about it. There's so many things you can study. You can look at like the dojis, you can look at, certain price. I think you just gotta pick some, find them in the market, see how well it works, and keep back testing and also forward testing to see, can you use this method to make you some money and predict the movement. You're not going to be right 100% of the time, but you want to try to be right like, maybe 55 to 70%, just somewhere around there. Yeah, this book, it definitely helped my understanding of trading. Most of this information you can just get for free online. However, it's good to have like a physical resource. That's why I bought this book, because I like to have something in my library I can just pull out, flip through the book, read it at night or something, and just gain an understanding from the guy that kind of brought this here. I mean, he didn't make it up, but he kind of gave the United States, I guess, this information about these, how to, do it. And it definitely has its importance. That's why people use it in trading. But I wouldn't make it the only reason to trade something. It just gives you further understanding of the psychology and understanding of humans around in that market to, I guess, further your understanding of if you should take the trade or not, or your confidence level about the trade. It's never 100%, nothing ever is, especially in trading. However, it definitely shows information. One thing too I want to note is all these examples and stuff, it's all taken in the past. And that's the challenging thing about technical analysis, is there's so much like BS around there. Because I can go in the market, I can find things that happened and say, oh look, I can say like, look at that candle, because of that candle it moved up, and then it faded because of this and that. easy to say when you have all the information, but what if it's like this, right? If I take away this, I say, oh look, a big up move. It broke above this resistance level right here. However, not too much. Maybe it goes higher. Like if I saw this, I would say this goes higher, and it fell. Then it goes higher. It's very easy to say, oh, look at that information because this happened. But in the moment you're trading, and without the entire move happening, because this is how you're going to be trading, right? You're going to see one candle at a time. It's a lot more challenging, and don't just think, oh, because this candle happened here, or because a candle like this appears, this move has to happen. Because you have to understand the whole move, multiple candles, what price levels are you at. It's a lot more challenging than just picking some candles and being like, oh, that's that. You gotta kind of see the whole picture of the information you have, and predict possible outcomes based on the price levels of the candles, or the candlesticks at certain price levels. That's how you're gonna get pretty good at this, I guess. But yeah, I always do like some level of fundamental and economic understanding, but you don't necessarily need it. He mentioned in the book, it's already built into the price action, but to me that's important, having a different understanding of the market as well as the technicals. But yeah, it's a good book. I think all the information's already kind of online. Support the resistance levels, the different types of wicks and candles. But if you want like an actual resource that you can like pick up, carry around your house, or I mean, you could even just write in a book and watch videos. But he does give a good analysis. I don't think if I did buy this for $100, I don't think it was. Now it's probably worth $100 because it's a textbook. But I don't think I would pay $100 if I had to again, just because of the amount of information online about this topic already. But it's a pretty cool book. Anyway, hopefully you found this this video useful. The Japanese Candlestick, it's a great way of understanding human psychology in a market built around certain time frames. I keep repeating that because that's in essence why you use technical analysis, and specifically Japanese candlesticks. So yeah, anyway, I think we're gonna wrap this discussion and video up. Overall, I rate this book is good. However, it's just a lot of information that you sometimes don't really need, because it's like analysis paralysis, and that's what I got from reading this book. So I just picked out some things that I thought were useful, and then I just started putting them into practice, and then I realized I don't need all this other information. I can just use the things that I think are valuable, trade based off of that. And yeah, thanks for watching, everybody. Hopefully you enjoyed this video. If you did, cool. I'll see you guys in another one.